Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, with new shockwaves are hitting Wall Street this morning. Firstly, there's been a wide change in daylight savings time around the world, so Wall Street is still in its Monday trading session. It has been a disastrous opening, however, with the S&P 500 down about 2.5%. Tech stocks are the ones suffering most, especially Facebook, Amazon and Tesla. In economic data news, inflation is rising in the US according to the Fed's preferred measure. Prices rose 1.8% in February in the PCE index, with an annual inflation edging closer to their 2% target, a sign of strengthening American inflation pressures that will keep markets accepting that more rate rises will come this year. And there have been mixed signals from two major PMI releases today. The ISM one slipped from a very high level, while the market one reached a 3-year high on good order flow. These surveys were also out for China, which is expanding at a slower rate, and Japan, also expanding at a slower rate. China has responded to the US trade war tariffs with countermeasures of its own on 128 products it imports from the US, valued at about $3 billion. It is noticeable that the amounts involved are very much less than the duties that the US plans on $60 billion of steel and aluminium products, or even China's share of that. In China, systemic financial risks mainly lie at banks, which account for more than 80% of the country's total. But a new official report says financial risks at some of China's banks are high and have continued to rise, even though the likelihood of systemic crisis is declining. Risks at large state-owned banks and securities and insurance companies have declined steadily, they say, but those at smaller lenders such as Beijing Bank, Pingyang Bank, and China Merchant Bank and Shanghai Pudong Development Bank remain high and are increasing, the report says. And China has reported it had a current account surplus of $165 billion, or 1.3% of GDP. It ran a trade surplus of $141 billion in goods, but ran a deficit of $62 billion in services. These overall numbers are tiny in the perspective of the size of their economy and represent about 4 days trading in the year. US Treasury 10-year yield is at 2.73%, down 1 basis point in early trade after the long weekend. And gold markets are open again and are up strongly, climbing $18 to $1,343 an ounce. Oil prices are down sharply by almost $2 a barrel, with the US benchmark now at $63 a barrel, while the Brent benchmark is just over $67.50 a barrel. And the Kiwi dollar will start the week lower at 72.1 US cents. On the cross rates, we're at 94.3 Aussie cents and 58.6 Euro cents. That puts the TWI at 73.4 and still well in its 2018 range. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.